let's take a few minutes to review where the market is and where it could be headed. All right, consider this the game plan for the week, even though it is not in the beginning of the week. The U.S. had a holiday on Monday, so I wanted to wait out the open after the holidays so I can give better perspective, and I'm glad I waited. So I'm going to start with the Nasdaq. You're looking at the QQQ. I know there are a lot of lines there. For those of you who see my daily write-ups, so if you're part of the inner circle and you've seen these arrows before, especially the potential 1 and potential 2, and it had a potential 3 that got us to the end of today. So these played out. Those lines were there from Friday. I did not move them. What happened? So we had a red week last week, but not really bearish. It's not game over for the bulls. We still have catalysts. The two that I'm focused on this week, NVIDIA's reaction to the earnings, and also I know the market is interested in watching the Fed minutes. I am not interested because the Fed minutes are basically about something that happened 3 weeks ago, and whatever they say, it's not going to change my mind about what the Fed is doing or not doing. So I'm focusing on NVIDIA. I have no doubt that NVIDIA will deliver a good report. I'm not concerned with that. I'm concerned with how people will react to NVIDIA. Last May, the NVIDIA rally changed the game for the markets. It could change the game again, either make a new all-time high or cause another dip. Now, technically speaking, if I just talk technicals, I would remove emotions out of it, and that's what I want to do today. You're looking at a chart that has 30 minutes on the clock. So every candle you see represents half an hour worth of price action. And you're also looking at a few arrows. So let me walk you through. This arrow right there, the white arrow right here, if I make it thicker, you will clearly see it. I started drawing this on the 14th. I said maybe we fade and we test footing and we come down here. So that arrow was drawn on the 14th. These two blue arrows are drawn based on the action after that, and they kind of have an intersection of area of intersection. So what am I saying? The bulls are losing support that they need in order to avoid this area. So I do have other rising wedges and pointing lower, so I wouldn't be so quick buying calls. And if I am, I'm buying them from point A to point B. Like I see a reason to go from this level and that level in whatever chart you're looking at. So the big picture, the Nasdaq says they need a bounce in order to avoid a drop to 419. It is not a disaster, by the way. From the lows of today, it would be another 2% lower. Mind you, we're coming down from highs that we've never seen before. So we're not even like a handful off the highs. And so what level on the upside that I would be looking to say, okay, we're in the clear for now. This candle looks pretty pointy, 430. And look at this. This white line was there before. And if you look left enough, look, this was also a point of contention. I'm getting a little wonky with the level because to show you that this is not emotions, it's not an opinion, who's going to cut rates, who's going to raise rates. This is just based on chart price action. So the question is, are we now selling rallies? We had a red day, not a disaster. I want to answer now going forward, are we now selling rallies? And if we are, then I would expect lower lows. I would expect us to lose 491 and go into the mid 480s. So this week, that's my judgment call. Now, fundamentally, nothing has changed, honestly. Walmart told us the comp sales. So the consumer is spending still at full tilt. And that is 2/3 of the economy. So the GDP is not likely to deteriorate. Full employment is still here for now, as measured by the people that run this country. So there's really no change in the fundamentals. The mega companies are doing great, and that's probably going to continue. So it's all about charts for me right here, right now. It eliminates all the potential emotions. So what about the small caps, the basket of 2,000 stocks that I'm so focused on? This is them. This is a 15-minute chart. This is the spike from a couple weeks ago to 205 and then 206 above it. So this zone is still the zone to beat above us. And we took a step back, but not too far back. In other words, now the small caps are falling into a base of support. What they do with it is the question. If we lose said support, so 194 or lower, actually 193 or lower, then we open a trap door for another step lower, all the way down to like 188. And really, the S&P, in order to fulfill its promise, I've said that before, needs the participation of these 2,000 stocks. Pay attention to what NVIDIA does, and it's going to infect AMD. In fact, all the XLK, SMH, QQQ will be heavily dependent on what NVIDIA does. Last year in May, NVIDIA changed the game. It brought the whole S&P up with it. I'm not saying it's going to bring down the market with it, but it has the potential to move market based on high emotions. So be careful in both directions. So how do I trade this mess? So I'm mostly bearish, more bearish than bullish. So I use this dip to look at my bearish positions to see if I need to shore up any of them. There was nothing to do on any of them. I didn't reshort anything because nothing rallied, and I didn't find any worthy dips to buy yet. Tomorrow maybe we'd look at stocks like Palo Alto Networks. Maybe, I don't know if it's falling deep enough. Everything is so high, it's really hard to find bargains. I mean, I can find support zones, but that would make an assumption that the markets are also fine, and I'm not sure they're fine. I am expecting lower prices potentially with one pivot this week, which is NVIDIA. We'll see how that plays out.